There's a heinous risk that lurks with every single rental property investment. One false move with this powder keg and your portfolio can go boom. I'm Bryan Ellis. I'll tell you what it is and how to mitigate it right now in episode 121.
You're listening to Self-Directed Investor Radio, America's only podcast exclusively for affluent, self-directed investors, where each day of the week you receive innovative investment strategy and deadly accurate market analysis that's untainted by Wall Street and unblemished by government propaganda, all in 7 minutes or less. Coming to you now from iTunes, Stitcher, and SDIRadio.com, here's your host, Bryan Ellis.
Hello, SDI Nation. Welcome to the podcast of record for savvy, self-directed investors like you. If you're looking for generic advice good for anybody, strategy that John or Jane Doe can use, opportunities for the masses, well, folks, this ain't your show. I'm here to bring great clarity and expose exceptional opportunities exclusively for the affluent, self-directed investor, and to you alone. If that's you, let's get started, shall we? So yesterday was a crazy day on Wall Street. The Dow was down well over 1,000 points to start and rallied back almost as much, only to close the day down a net of nearly 600 points. Absolute insanity. And you know what? All indications are that today will be a huge up day, not for fundamental reasons, but for reactionary ones. And before I get to the focus of today's show, I'd like for you to ponder this, my friends. Core value number one of wise self-directed investors is that we respect our own capital. That capital came as a result of your own time, energy, and effort, or maybe it found its way to you through the blood, the sweat, the tears of someone who cares about you. Either way, that capital deserves to be respected. Is it really showing respect for your capital to have it exposed to the risk on Wall Street? Just think about it. So onward to today's discussion about rental risk and how to mitigate it. Just a quick note. This week I'm hosting a great training. I'll be teaching you about 3 different geographic markets that make the grade as excellent rental property locales. But even within those markets, not every single property gets the SDI seal of approval as simple, safe, and strong. But I'll tell you exactly how to find those properties and what makes them such great opportunities. In fact, I'll have several samples currently available to share with you. More about that training at the end of the show, but if you'd like to go ahead and request an invitation, you can do so by texting the word invitation to 33444 or by visiting sdiradio.com/invitation. Folks, I think that buying and holding rental property can be a great way to build a sustainable base of wealth for your portfolio. I really do. Look, on the training I mentioned to you just a moment ago, which happens later this week, I'm going to introduce you to some great off-market properties that, in my humble but entirely accurate opinion, represent really solid investment opportunities. But I'm also a realist. And there's a risk that exists with rental property ownership that, frankly, is terrifying, and that most companies who market turnkey rental properties are careful to avoid discussing. What's that risk? Lawsuits, and more specifically, the astounding cost of them. Really, if you think about it, lawsuits go with the territory of real estate. Even in the normal course of business, you'll occasionally have a tenant who doesn't turn out right, and you'll have to evict them. In most states, eviction is a legal proceeding of some sort, and sometimes even requires a court appearance. Sure, it's likely your property manager will handle that for you, but the point remains. Lawsuits really are part and parcel to the rental property business. Thankfully, most of the time in small claims court where things happen quickly and fairly inexpensively. I won't spend any real time talking about mitigation of legal risks involving eviction, other than to say that 99% of that battle is proper documentation. Documentation of things like the terms of your lease, move-in, move-out inspections, handling of security deposits, maintenance responsibilities, etc. Again, this stuff is the job of your property manager, so you shouldn't have to think about it, but you should at the very least determine before hiring a property manager what their success rate is when filing evictions. It should be very, very high. If it's not, either the property manager isn't documenting the important things well, or the regulatory environment is unfavorable to landlords. Either way, you need to watch out. But far more ominous than eviction lawsuits are what I call real lawsuits, the kind where somebody on your property trips over a rock, falls down, hits their head on a stump, and dies. Or more likely, the kind of lawsuit that results when you're in a minor fender bender, but the other party decides to sue you for all you're worth, including your rental property. Folks, the thing about lawsuits is this. They can be catastrophic even if you win them. Here's an example from my own life. Many years ago, I took on a business partner, and it was a poor decision. Very poor decision. It was a great learning experience. It taught me the horrible effects of insufficient due diligence, but it was still an awful decision. What I failed to discover in time was that the guy was actually a convicted felon and was very, very fond of suing his business associates. And ultimately, he sued me too. Now, here's the thing. I won. I won convincingly. In fact, he sued twice, and both times we got his case dismissed before the trial. It's hard to win more convincingly than that, but you know what? It still cost me about $80,000 to win. That's the cost of an entire rental property. Not good. What's the solution? Well, there's good news and bad. The bad news is there's no way to absolutely eliminate the threat of lawsuits. You can, and you should, after confirming with your own lawyers, use language in your contracts that set strict limits on liability and firm guidelines for how disputes will be resolved, but that only goes so far. So what's the good news? It's possible to make yourself a very unattractive target for that kind of lawsuit. How? Well, I bet you think it has something to do with putting your properties into LLCs or corporations or something. And sure, that's one way to go that can work, and maybe that's the right call for you. But there are other, easier ways to be practically very wealthy while legally being very, very poor. One great approach is to legally shift the equity in your property so that, in effect, nobody even knows that equity exists. If you appear to own a lot of property, but you have no or even negative equity in them, you become a really unappealing target for lawsuits. There are really a number of ways to do that, and the right way for you to do it is not a cookie-cutter answer. In fact, one way of doing it that's maybe perfect for me may actually cause you more legal trouble. That's why, by the way, every client in my SDI Core 100 group, which is the small group of investors with whom I work most closely, well, they're required to have a pre-purchase consultation with the asset protection attorney that is my secret weapon for avoiding legal trouble. We actually pay for this consultation with that attorney for our members. It's that important that it happen. You see, you've got to get this stuff right from day one. And in fact, I won't even work with clients who refuse to be proactive about protecting themselves from legal risks. Because you know what? It's really pretty easy to get it right when you do it in advance. And that's part of what I force my clients to do before I allow them to purchase any of the great deals we offer from time to time. So what about you? If you'd like to learn about 3 great markets for rental property in America, along with an introduction to several specific off-market rental properties that fully embody the criteria of simple, safe, and strong, and maybe even learn how you can have a solid dose of legal protection built into your investment from day one, then join me for a special webinar this week. To get your invitation, text the word invitation to 33444 or visit sdiradio.com/invitation. Respectfully, I recommend you move on this very quickly. My friends, invest wisely today and live well forever.
Thank you for listening to Self-Directed Investor Radio with Bryan Ellis. Don't miss a single episode. Be sure to subscribe to Self-Directed Investor Radio right now on iTunes, on Stitcher, and at SDIRadio.com. Your feedback is always welcomed via email at feedback@SDIRadio.com. This show is for entertainment purposes only and is not intended as legal or professional advice for your situation. Content is the property of the Self-Directed Investor Society.